You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back for TWIFO, This Week in Futures Options, a program that breaks down all the action going on over there on the futures options side of the fence. So maybe we're going to talk some metals, some ag, some rates, some equities, some energy. You never know what's going to make it on the dock. That's why you have to tune in every week. We got a pretty crazy week on our hands this week, so a lot to unpack on the show today. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are mainlining these days. Remember, if you listen in on demand, we ask that if you like what you hear, keep rating and reviewing. It really does help the legion of new people who are discovering this content all the time. Obviously, we've been doing this for a while. January was 15 years. So we got quite a backlog of reviews and content in the store already, but you can argue the new ones these days more important than ever, given how many people are flocking to these markets and to our content every week out there these days. And of course, if you want to join us, go above and beyond, get the live streams, get the exclusive shows and everything else, theoptionsinsider.com/secret club is the place to go to begin your journey to the dark side. And of course, however you listen, live after the fact, keep hitting us up, those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from today, holding down the CME and FTSE Russell hot seat, our old friend, Mr. Todd Colvin, the Senior Vice President over there at AMBROSINO Brothers. Todd, welcome back to TWIFO, sir.
Mark, thank you very much for having me. It's been, I'd say it's been quite a week, but it's been quite a day.
Yeah, it's been
out there with all that's going on.
You picked a good one, sir. There's a lot to unpack here on the show this week. So let's get going, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we profile everything that's lighting it up to the light side, aka the upside, and to the dark side over there at CME this week. As Todd mentioned, we have a crazy week, a crazy 24 hours. We're going to break it up a little bit differently this week for the Movers and Shakers. We're going to do both. We're going to do the week and indeed the past 24 hours, because I'm assuming, unless you've been living under a rock, you know the past 24 hours, the event that we've all been dreading, fortunately, has come to pass, which is the invasion of Ukraine. Todd, before we get rolling with the Movers and Shakers, everything, I'm curious your thoughts, your overall 10,000-foot perspective, and the impacts you're seeing so far on the markets on this event that we've been dreading for a while, and now it's finally come to pass.
Yeah, and we saw that overnight initially. You saw risk assets really get walloped, and then you saw some others do particularly well and continue to do particularly well. No big surprise there. I think at this point, the reversal that we've seen in some of these markets from their extreme highs and lows is a bit of a surprise, being that it's only been how many hours since we've really engaged into this event. After talking about it for weeks, and talk is cheap when you're talking about invasions and all that. Certainly, we don't want to see it on any level, but when it happens, it seemed to be that the volatility moved up very quickly, and then while it is still elevated, it has come off quite a bit from those highs, and we've seen some price differentials moving around as well. So it's been a very interesting 24 hours, and we'll talk about that as we get further along.
Yeah, you're right. We are seeing some reversals out there now across the broad market. So a crazy and unprecedented 24 hours in many respects. But Todd, I'm going to ask you now, where should we begin our journey this week, to the light side or to the dark side, sir?
Well, Mark, we're going to have plenty to talk about on the light side. Let's start with the dark side and see what isn't, which isn't seeing volatility jump through the roof.
All right, let's do it, listeners. Again, you guys can see this report for yourselves if you follow us, or if you follow CME over there on Twitter. They put it out ahead of the showtime. We usually reshare it there. So this is one of the few reports you can't access unless you have access to the premium tools. But if you follow us on social media, you can see it out there. And like I said, we're mixing it up a little bit this week because the last 24 hours have been so topsy-turvy, I think, to put it mildly, out there. We're going to do two reports. Let's start with our usual report. The show is called This Week in Futures Options, after all. So let's start there. Let's go back over the crazy week. Kind of a split week to the light side and to the dark side, even if the magnitude of the movers to the upside were a little bit stronger than we saw to the dark side. Net movers to the upside and to the downside both seem to be about the same. It's roughly 50-50 this week. Let's go to the dark side first. Let's go. Actually, we have a tie. That's rare. A tie for the fifth place between the NASDAQ 100 and Oats, both off 4.65% this week. Oats number 3 to the dark side last week as well, off about 5.5%. By the way, it's a crazy week when the Russell 2000 was off 4.42%, and it can't even break the bottom 5. It's only at number 8. So that's a crazy week out there. Number 4, feeder cattle, off 5.05%. So maybe some surprise names out here. Number 3, the Dow, off 5.09%. I haven't seen the E-mini Dow in any of our movers and shakers for a while, but it's there this week. Number 2, this is a name, like I said, you could probably guess this name in any given week to the upside or to the dark side, and you have a strong chance of being right. This week, Bitcoin is number 2 to the dark side, off 11.56%. It was number 4 in the same direction last week, off 5.25%. And number 1, with a pretty impressive dark side bullet, this one's been kind of taking it on the chin of late. Palladium off again this week, off 18.21%. Let's go off to the light side now. And, energy's been making a lot of the headlines, but there's actually a lot of ags over the course of the past week here in our light side. In fact, outside of one spot, it's all ags, which is interesting. Number 5, corn up 8.46%. Number 4, soybean oil, up 9.38%. It was number 5 in the same direction last week, up a little over 3%. Number 3 is Brent, up 11.52%. Number 2, the SRW wheat, so the Chicago wheat, up 16.04%. And KC wheat taking the top spot this week, up 17.07%. I forgot which of our secret club members asked about Putin if he invades Ukraine. Is there a wheat angle to this? And these numbers might argue yes, because, of course, Ukraine, in addition to all the energy factors going on with this, and energy clearly the driving factor for a lot of what's going on over there. But, the ag markets, no small player over there in the Ukraine as well, kind of the breadbasket for a lot of that region. So interesting stuff afoot. Now, I mentioned we're going to do a little bit different this week as well. That's just since our last show, but we all know the last 24 hours have been pretty tumultuous. Obviously, the tanks have actually started rolling last night. So let's look really quickly at the past 24 hours and see what changes we've seen out there as well. Actually, interestingly enough, kind of evenly split as well, even though, once again, the magnitude of the moves to the upside seem larger. But numerically, there are about the same number of light side and dark side movers over the past 24 hours. Let's go back to the dark side again. The number 5 over the past 24 hours, platinum off 2.85%. Number 4, feeder cattle, once again, off 3.15%. Number 3, Bitcoin lost about a little over 4, about 4.1% just in the past 24 hours. Number 2, we got the Chicago ethanol. I don't see that popping up on our radar too often, off 6.16%. And number 1, palladium, off almost 21% in the past 24 hours, listeners. So pretty much the lion's share of that palladium move coming in the last 24 hours. We've got to the light side now, kind of similar to what we just saw, only throw in some rates there as well. Number 5, KC wheat up 5.5% in the past 24 hours. Number 4, SRW wheat up 5.71%. Number 3, heating oil up 6.4%. Number 2, it's Brent up 7%. And number 1, it's Eurodollars up 7.75%. There's a lot to unpack here. First off, before we get off of this, any surprises for you, Todd, looking at this over the past week or the past 24 hours?
No real surprises. A lot of these trends had already begun. When we talk about some of the moves in, say, crude oil or Brent or gold, while they made big moves over the last, call it 24 to 48 hours, these moves had begun well back a few weeks. This isn't something that just came out of the blue. And I think when you look at on the other side of that coin, some of the decliners, at this point, Bitcoin's kind of starting to look a little bearish, and you have a lot of people looking at Bitcoin as the digital gold, so it would maybe have some of the same characteristics, but certainly did not trade that way. Not in the last 24 hours or 48 hours, I should say. They went in opposite directions very, very quickly.
No digital gold over the past 24 hours, that is for sure. But what has been moving, what has been dominating the headlines for the better part of the last few months, and what many have seen as the real driving force for this invasion, is the energy market. So let's start there.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, welcome to the world of energy. We've been talking about it for a while. Nat gas has been on top of mind for a lot of people the way that it really hasn't been. I can't recall another time we've talked about natural gas this much in the network's history. So clearly an unprecedented time. It's also, as I mentioned before, a bit of an evolutionary period for the natural gas markets. In the past, when we would talk about nat gas, years ago, it was always a very localized phenomenon. You would talk about, what was available, what the markets were in very small localized areas near the refinery, because they had to ship it or pipe it away. Otherwise, they would burn it off. So natural gas really wasn't seen as this massive global commodity. And now these days, it very much is. Obviously, if it's being priced 4 to 5 times more in certain regions of the world than it is, let's say, near your refinery in wherever, Louisiana or Texas, then you're going to put it on a tanker and ship it over there. So that has had an interesting impact on the natural gas markets here in the U.S. Coming into showtime, let's start in nat gas land. We are seeing nat gas at about $4.67, up about little over 30 cents on the week, nearly 7%. Todd, obviously energy's been bandied around a lot as a primary driver for what's going on over there in the Ukraine. What's been lighting up your tape in the world of energy since the last time we chatted, sir?
Well, if you look at nat gas, most of 2022, it's spent in about a $4 to $5 range, and it has tested both ends of that range. And obviously today we're seeing it at the upper end. Makes very little, no one should be surprised given the fact that producers here in the U.S. and over in Russia are big. And I think at this point, nat gas is going to be focused a little less on the weather, which is typically, living in Chicago, you go outside, it's cold, you're going to have to use your heat in the winter. That's typically a good indicator. But now it's going to be more about supply and, how you're, like you just mentioned, if you're producing nat gas here, it's going to cost you, something a little extra, we'll say, to get it from point A to point B, especially if point B happens to be across the Atlantic. So at this point, I think nat gas is going to remain elevated, at least until we can have some clarity on where this whole Russia-Ukraine quagmire is headed.
Right. And on our last show, we had Russell Rhodes on the last show with us, and we were looking at bids and trading activity all the way out to October and beyond on the 7 strike. And you're right, nat gas, usually a very seasonal product, usually beyond winter. You don't see those bids sustaining themselves, certainly not to the 7 strike and beyond. So seeing that sort of thing, that does imply, and once we started looking at that, we thought maybe this Ukrainian thing might have some more legs than people are anticipating. But let's go out there right now. Let's see what the numbers are showing us. You guys know where to go, listeners, to run these numbers for yourselves completely for free, because that's how much we like you. CMEGroup.com/TWIFO, TWIFO, or /TWIO. Both of them will get you to these reports. Then go on into the drop down for asset class. Go to energy and then move on over. We're going to start in nat gas because we said it is the primary driver. WTI getting a lot of headlines now as well. We'll probably get there as well. But yeah, nat gas is what everyone's talking about right now. Surprisingly enough, we are not perhaps seeing the paper you might expect. Of course, we did have a shortened holiday week, so that's clearly weighing on these numbers. 300,000 contracts. Usually we would see at least 400,000 for a pretty active week. Last week we saw, I think it was 800,000. So we saw a lot of paper on the tape last week. Obviously the holiday here in the U.S. is gumming up those numbers a little bit. We're really only talking Tuesday and Wednesday now and part of today, and already 300,000 contracts. So if you look at it in that context, it is a little bit larger number, but still interesting stuff afoot out here. And of that, about 300,000 contracts, about 29% going up, not in the contract going out tomorrow, thankfully, but in the April contract that looks like about 32 days to go. So we're going to hang our hat out there. If you're wondering what the vol is right now in nat gas, it's at about a 60, up 5 points right now, a little north of 60, about 60.15, which if you've been following nat gas for a while, is actually not that elevated. It's broken into triple digits or close to it multiple times over the past year. So maybe the fact that we're finally getting the event that many have dreaded, maybe some of that afoot out there as well. Skew-wise, last week the puts 4.2% cheap. This week, nearly 6%, 5.8% cheap. So puts getting cheaper and calls all the rage out there. Last week, they were 7.6% bid. So you're paying that premium on top of the 60% vol to get the 25 delta call this week, listeners. Or I should say last week. This week, it is 10.3% bid. So it's even more aggressively bid to the upside, which again, given what we're seeing out there, not exactly surprising. What may be surprising to you listeners, though, is what the number one hot option is out there this week in nat gas. Because if you guessed the 4 puts, you are the winner chicken dinner. We were talking before about 7 calls. You can maybe argue 5 calls, 6 calls, 4 halves. You might expect some of these upside calls or even at the money calls to be dominating. But no, it is the 4 puts, a substantial number of 4 puts going up, particularly today. There's about 16,500 have gone up this week, 10,300 of those going up today, about 4,000 yesterday, most of those opening 2,000 and change on Tuesday. So 4 puts, clearly the number one by a surprising amount. Also seeing, 4 half puts going up today. So there could be a bit of a ratio on these, but doesn't line up exactly, even though the total volume for the week does, about 8,000 versus 16,000. But you're looking at today's numbers, it's about 7,500 of the 4 half puts versus 10,000 of the 4 puts. So if it was a fly or something like that, the ratio is a little bit wonky. Instead, let's go out to the number 2. And this makes more sense. This is probably more along the lines of what you expected, listeners. It's the 5 calls. So near-term out-of-the-money calls in April have done almost 10,000, about 9,500 contracts. Again, almost all of that today, 7,200 going up today. So very near-dated paper in nat gas. Not surprising, given everything we're seeing out there over the past 24 hours. We're also seeing 5 calls pretty active here in June, going up about 8,600 times. And then 4 half puts, like I mentioned, going up about 8,200 times today in April. And these are, most of these going up today, 7,500, that 8,200. Trading today out here. So more puts than I would have expected on a day like today. But again, maybe that's kind of speaking to the larger nature of what we're seeing out there. I mean, the equity markets are kind of in the midst of a reversal right now. Maybe some folks looking for something similar here in the nat gas markets. We are seeing 5 calls trading pretty much across the board. I guess the 5 call is the new 7 call. 7 call was hot last week. This week it's 5 calls. Pretty active here all the way out. You're looking at 5 calls trading 7,000 times in October, 5 calls going up about almost 4,000 times in September. It's the 4.85 calls in August that are dominating the tape. 5 calls active here in July, 5 calls, like I mentioned, in June. So 5 calls across the board. In fact, we're seeing 5 calls trading all the way into January of next year. So maybe the 5 strike is where the action is to be found. Todd, any of this surprising you so far? First off, the biggest trade of the week, I should say hottest option contract for the week, are the 4 puts. That kind of surprises me. And then anything else catching your eye out here in nat gas this week, sir?
Well, as you know, and if you've watched nat gas over the years, this isn't a commodity that crawls. You don't see it go from 3 to 301 to 302 to 4. It moves like lightning, especially when there's news out there like there is over the last month or so, including today. So I think if you're an opportunistic buyer of puts here, it's that you're looking for some kind of calm, some kind of calmer heads, common sense to take over, and for nat gas to come back off. Likewise, if we get any kind of positive weather, again, you didn't mention weather once in your little talk there. I think that could also be something that if you buy some puts here, you're anticipating nicer weather on the horizon. If there's some kind of way to wrap up what's going on over in Eastern Europe quickly, obviously I don't think that has an effect on April, but certainly the ones down the roads a ways. Being long the 4 puts here, they're going to be cheaper. They may not be as cheap as you think, given the volatility, bit of volatility, but certainly with the move in underlying, buying the 4 puts here, it's basically the bottom of the range in 2022. So it makes sense to be buying puts somewhere on a move like this.
Yeah, interesting stuff. We could probably talk more nat gas, but I want to squeeze in some WTI as well. Obviously, prices for crude getting a lot of attention in the wake of this invasion as well. We were seeing Brent and others topping the 100 level. Coming into showtime, we're seeing WTI at about a 93 1/3. So not quite at the 100 level, but up pretty strong, 3.5% or so right now on the week. So let's see. And how much paper is going up in WTI? Again, it's a shortened week, but we're still talking 600,000 contracts on the tape for WTI. So WTI is active this week. It's moving. It's shaking. Let's see. And of that, about 45%, so nearly half of that 600,000 contracts going up in the April contract that has about 21 days to go. So we're going to hang our hat out there, listeners. Let's see. The vol, if you're wondering, in WTI, looking pretty frothy, 50.5. That's kind of on the higher end of that range. Let me just see really quickly. Let me pull up a chart if I can get it working for me really quickly of vol out here. Yeah, it's looking pretty frothy out here, listeners. We haven't seen these levels in a little while. You got to go back to kind of the end. If you look at the end of the year, then we saw a 60 vol for a bit there in WTI. But outside of that, yeah, these are pretty interesting levels here from a vol perspective. In terms of skew, we're not seeing a heck of a lot of directional bias to the skew this week, which is maybe also interesting in and of itself. The puts are kind of unched. Last week, they were about 0.5% rich to the at the money. This week, about 1/3% cheap. So they have swung a bit, almost a point, but neither really here nor there. The calls last week, 2.5% bid. This week, 1.9% bid. So we're not seeing a tremendous bias in either direction, which is kind of interesting. Maybe kind of showing a bit of an uncertainty here, whether we can maintain these levels, are going to retreat a bit, or continue north here. That's interesting in and of itself. Let's go out to see what the most active contract is this week. Now, this makes a little more sense, given all the headlines out here. Everyone's talking about $100 oil, $100 oil. It was the April par calls, the 100 calls that were lighting it up out here this week to the tune of 30,300 contracts on the tape. The big day today, about half of that, 14,600 going up today, about almost 12,000 on Tuesday, a little over 4,000 on Wednesday. Most of that opening earlier in the week. Obviously, we don't know today's numbers. So par calls, again, that's kind of what I expected when I pulled up these numbers today. I was not expecting the puts on nat gas. So that was kind of interesting, a little bit of a curveball there. Behind the calls, then it's kind of a distant number too. We're talking actually the 110 calls out in June. They've done about almost 20,000, about 19,000 contracts this week. Then we fall to number 3. We've got the 85 puts back here in April, doing about 15,000 contracts, a little over half of that going up today, about 8,700 today, almost 4,000 yesterday, 2,500 on Tuesday, most of that opening throughout the week. So opening on the 85 puts, got action on the par calls. That's probably why the skew is kind of staying balanced right now. We're seeing kind of activity on both sides of the curve there, which is kind of interesting. Let's go a little bit farther out just to see if we see any other interesting strikes. If the 110s are not enough for you, got the 120s trading in July, listeners, not much, about 3,000 times. Par calls also going up in August about 3,000 times. So it does seem like par and above is kind of the strike du jour. Par calls also trading in December about 7,500 times. So yeah, interesting stuff here. I know energy's been on the docket a lot over there. Todd, what's been lighting up your tape in the world of WTI these days, sir?
Well, at WTI, you got to remember, it's been a supply-driven market for so long. We forget that there's another component to that. That would be demand. And if you're looking at a global economy that maybe is looking to suffer here, maybe pull back a little bit, while we did get to 100 today for the first time since, I think, July of 2014, you did see the pullback. And the idea now becomes not so much supply-driven, but is there going to be demand if the economy is still trying to get its sea legs back under it to prevent it from going much further at this point, at least until these central banks can figure out a magic spell to get us out of whatever the crisis they created back 2 years ago. And at this point, WTI is just a good barometer. If it pulls back, it probably is a good sign that maybe there's economic weakness coming ahead globally.
That would be an impressive magic trick if the Fed can pull us out of this. You're right. But you mentioned we could probably talk energy for the rest of the show, but there are a lot of other complexes lighting it up this week. Todd, where should we hang our hats next?
Well, given today's move, and I know we've seen metals make some pretty big moves, but the move in gold today was pretty impressive.
All right, so
in the last 24 hours.
Let's get out to the land of the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the world of the metals. You guys know where to go. Go to that drop down, listeners. Pop it out of energy and then move that asset class drop down all the way to the bottom of the list to metals. Then go into the precious product family and then head on over to gold. That's where we're going to start our exploration this week. And, Todd, it's been an interesting analysis. I know you were joking about digital gold with crypto earlier, but there's been kind of a persistent drumbeat out there, certainly of last year and maybe even back to the start of the pandemic, that gold hasn't really delivered on the promise in these uncertain times. Maybe they just had to wait. Maybe they just needed to wait for the past 24 hours, Todd. But what are your thoughts on metals over the past 24 hours? And also on that question, do you think maybe the precious stuff has underperformed during these tumultuous last couple of years?
Well, yes and no. I certainly believe that every commodity has its place and its time. And we saw that with Bitcoin. And Bitcoin's not going away. Don't get me wrong. It certainly is now kind of taken a back seat to what we're seeing in gold. And gold today getting up, close to 1975, only to give it all back. It to me seems that's the kind of trading that we haven't seen. So gold right now set the bar pretty high. But of course, given the fact that there has been a bit of a pullback here, given the fact that we've seen speculator interest continue to increase, despite seeing the first month of the year, speculators were running out of gold due to the fact that the Federal Reserve was supposed to be raising interest rates, which would certainly not be a positive variable for gold prices. But gold has really weathered the storm here. And over the last 2 weeks has seen a very impressive run, which culminated again today in seeing a print almost to 2,000. We didn't quite get there, but it was as close as we've been, since back in September of 2020.
Yeah, you're right. Didn't quite get there. Now kind of giving up the ghost, kind of like we're seeing with the broad equity markets reversing, seeing some of that in gold. In fact, on the week here, we're seeing gold net off about 10 handles, a little over 10, about 10.2 handles. That puts it about 1889 coming into the start of the show, off about 0.5% here on the week in that front future. How much paper is going up in gold? It's a truncated week. It's a quiet week. Still 250,000 contracts on the tape. That's nothing to sneeze at when you're talking about gold, listeners. And of that, close to half, about 43% going up in the April contract that has about 32 days to go out here. So we're going to hang our hats out there, listeners. If you're wondering what is gold vol right now on that April contract, it's a little bit shy of 15, about 14.84. It's off about almost 2/3 of a point on the week. So gold vol coming in. Again, you could argue maybe we have seen the events people have been dreading for a little while. So maybe some of that event risk coming off the table out here in gold. Skew wise, precious stuff tends to have a bid to the upside in these types of environments, and that remains the case right now. The puts last week, 1.9% cheap. Now this week, 3.3% cheap, so getting a little bit cheaper. So you're already getting a pretty cheap vol, and if you're coming in to scoop the puts, you're getting a discount on top of it. And then the calls last week, 4.8% rich. This week, nearly 7%, 6.9% rich here. And in terms of the action, Todd was just talking about the 2000 strike. That kind of has the same allure, the same attraction that the par strike, the 100 strike does out there in WTI. Everyone's talking about gold. Can it maintain? We saw that 2000 level during, the madness of the pandemic, and we kind of retreated off of it. Can it maintain it again? Well, so far the answer is no, but folks, not stopping them from putting on some paper to the 2000 strike. That is the hottest contract out there right now. The 2000 calls in April, doing about 9,000 contracts this week, the big day. Clearly today, the past 24 hours, pretty huge in gold. 5,400 contracts going up today, 2,700 on Tuesday, and a little less than 1,000 on Wednesday. Most of that opening earlier in the week, and as well as we have the 19 half calls. So actually, they were in the money, not so much anymore. 19 half calls going up this week as well, 7,100 of those. Again, the big day today, about a little over half, 3,850 going up today. So it is kind of a call palooza out here, listeners. 2,100 calls. So if the 2000 strike, not optimistic enough for your blood, 2,100 is going up about 6,000 times. Again, the big day today, 3,800 going up today. The rest kind of scattered throughout the week. Those were biased towards closing earlier in the week. So interesting to see if that was the case with today's paper as well. Then we do have some puts, not all calls all the time, listeners. It's just mostly calls all the time. The puts, 1,700 puts trading about 6,000 times today. The big day for those, actually Monday. That was all opening on Monday. So 5,400 of those trading on Monday, a couple hundred trading throughout the rest of the week. So opening 5,400 puts, 1,700 puts, 5,400 times on Monday. That's kind of interesting. Someone may be getting some of the fade in perhaps before the big invasion, or perhaps thinking that was a nice line in the sand to draw. So far, they've been right. We haven't crossed that strike to the dark side. And followed hot behind it by the 1,900 puts going up 5,600 times. The big day for those was today, 3,200 of those today, 1,500 on Monday. There was some action, looks like, out here. It looks like maybe 1720 puts were also active on Monday. So maybe a bit of a put spread, 1720, 1,700 going up about 5,000 times on Monday in gold. It's a tight spread, but we've seen weirder things. Usually when we see the spreads, they're crazy ones to the upside. In fact, let's go look really quickly. See if we see any of those this week. 2,000 calls trading in June, 5,000 times. 2,100s trading about 5,000 times those were April before. The 2,000s trading in April and in May here across the board. 2,000s in May and 2,100s trading in April, both about 5,000 times. And 5,000s also trading in December. 5,000. Yes, the 5,000 calls traded. I thought that was an error at first, listeners. I have to admit, 5,000 calls in December traded 5,225 times today, listeners. My goodness. Also saw the 2,000s going up today, 560. So a 1 by almost 10. Wow. That's I don't know, Todd. What would it take for us to get to a 5,000 strike by December in gold, sir? Maybe we don't want to know as a society.
We don't want to know. You do not want to know. If we were trading 5,000 gold, we got bigger problems.
I was like the old days when I was in the S&P and people, they would sell like the 400 puts and people would laugh and say, well, if we get there, forget about it. We got other problems. So yeah, 5,000 calls. Wow. I need to parse that one a little bit. That's beyond even the usual optimism that we see here for obviously we don't know if they were buying or selling or anything along those lines, but just that there was a print for that much size on the 5,000 strike. Oh, wow. Maybe we'll dissect that a little bit more tomorrow on Oddities, listeners, just because I need to know more about that print. That one's kind of fascinating. All right, Mr. Todd, we can keep going. Do you want to hit on any more metals, or should we keep on rolling maybe into your other favorite complex, the rates, sir?
Why don't we roll over into rates? A lot happening there.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody. Welcome to the world of rates. Get into that asset class drop down, pop it out of metals. You're only going to go up one slot. You're going to go up to interest rates right above it. Head on into U.S. rates. I think we'll hang out at the 10-year first, but you could also pull up the euro dollar. That was also moving quite a bit this week. Mr. Todd, what is lighting up your day and your week in your bailiwick, in your home markets of the rates, sir?
Well, I think at this point, a lot of what we're looking at is in the short-term interest rates with expectations to a Fed tightening coming as early as March. And those expectations have been all over the map. And we've seen expectations of a 50 basis point rate hike, about 80%. Today, that's at about 8%. We heard from St. Louis Fed President Bullard 2 weeks ago. He talked about trying to get 100 basis points of hikes in by the end of June. Then they had to use some other presidents to kind of walk that back a little bit. So you've seen a lot of movement that in areas where you don't typically see it. In the front end of the Eurodollar curve, you're seeing it. You're seeing a lot of movement in the front end of the Treasury curve. So there's a lot of action going on because there's kind of a double talk going on with the Fed. I know it's hard for you to believe, you and your listeners, that the Fed would be saying one thing and doing another. But at this point, it seems the market is got a little over its skis in how aggressive the Federal Reserve might look to raise rates and has now come back down to earth. And we can probably look at maybe only 25 basis points of hike at March and then sort of a wait and see approach from the Fed. And that's what we're seeing today. Some of that, we're reversing some of those prices, seeing those short end interest rates nudging back down after being a little bit elevated.
Well, we saw euro dollars in our movers and shakers here. They were in the 24-hour movers and shakers. They were up the most over the past 24 hours, up nearly 8%. So let's hang our hat there. You mentioned kind of that short end of the curve. Eurodollars is interesting, kind of spans many different elements of the curve. Doesn't quite go out to the 30-year, but it goes a little bit of a ways out there. And how much paper is on the tape right now in the Eurodollars? Listeners, 2.2 million contracts. It may not sound like a lot for the Eurodollars, but again, we're talking about a truncated trading week here. And in terms of where the most action was, it's only a slight majority this week. Again, that's one of the interesting things about Eurodollars. The paper is so spread out. We've got paper going out in the March contract expiring, about 18 days, 12%. Actually, about 15% is the number one. That's in the DEES contract. In those front Eurodollars here, the 14.9% of the DEES contract. So that's where we're going to hang out here, listeners. 14.9% of that volume going up. In the December contract here in the Eurodollars, you might say, well, what is the vol out here in those DEES Eurodollars? It's pretty frothy, listeners. We're talking about nat gas can get up into the triple digits. Well, Eurodollars is already there. 102.5 for this DEES contract here in the whites. 5.5 points up on the week. Skew-wise, seeing some impressive bids to the puts here, too. We're starting to look like a little bit of an equity here. The puts, 15.6% bid last week, this week. 15% bid. The calls last week, 6% cheap. This week, 8.7% cheap. So calls are cheap, puts are bid. Where else have you seen a skew like that, listeners? I ask you. And in terms of the number one contract out here, and it looks like 99 quarters were doing the line. And I take it back. It was the 99 halves going out in March that did almost 50,000, 49,500 contracts this week. That is the big trade. Sometimes it's hard. There's so much scrolling to do to find the top trade, listeners. So you do have to go to March. It's the 99 halves that were lighting it up out here this week, listeners. The big day for them was actually Wednesday, 30,500, 15,500 today, and a little over 3,500 on Monday. Looks like 99 and 3/8 were also trading similar sizes, 30,000 on Wednesday, 15,000 today, 2,000 on Tuesday. So maybe some vertical or related action going up there as well. Interesting. And they got the all sorts of prints going up here this week in the Eurodollar, which I love. I do love the old 16ths and 8ths. Kind of brings back the old S&P days in me. But you know what? Speaking of S&P, we have so much to squeeze into the show today, Todd. We got to keep on rolling. It is time to get to the world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's get to it. Let's get to the world of equities. Todd, you alluded to it earlier. We are seeing some reversals, and that's pretty much the case out there. We were selling off hard in the overnight session. We came in down hard on most of the major equities. And now as we're talking through the show, NASDAQ is swung from about 2% to the dark side to fully 2% on the upside, about 2.25%. S&P also has swung to the green now, too. It was off about 2%, a little more, now about 0.6% to the upside. Dow is the only thing still in the red right now, listeners. So a little bit of a BTFD here on the old Ukraine invasion. We are still seeing vol up from this time last week, listeners. Last week, RVX, so the vol of small caps at about a 37.63. That's up about 4.5 points from where it was this time last week. This, again, was when we kicked off the show. Listeners, I'm sure if we react to these now, might be a little lower. Spoiler alert, probably be a lot lower. 32 1/3 was where VIX was when we kicked off the show, up about 5 3/4 points. VVIX at about a 130. That puts it up about 2.5 points from this time last week. Vol Q at about a 33, almost 34, puts it up about 4.25 points. So that VIX to RVX, so the large cap to small cap vol spread at about 5 1/3. That's actually a little bit tighter than it was this time last week, about 1.25 points tighter. And VIX to vol Q at about 1.5 points. That's actually 1.5 points tighter. So that's come in pretty much by 50% since this time last week. Todd, a lot of crazy stuff afoot in the world of equities, including this crazy reversal. What's lighting up your tape out there in the world of equities right now?
Well, you can look at it from 50,000 feet, and it kind of screams of preservation of capital. We knew there was something out there in the wind, and you saw the VIX remaining elevated. We haven't seen one of those major spikes in the VIX that we would assume we would have seen on a day like today. But I think at this point, the buyers, like you said, they're buying the dip. Buy the dip works, I think, 70% in 2021, and it hasn't been so successful in 2022. But I think at this point, on this style of move and with confidence that some kind of resolution can find itself, equities were, certainly on sale today, if not this week. And those that are willing to step out and take a little risk are going to get paid in today. And that's, we've seen this type of move before. We saw this at the end of January. So this isn't the first time we've seen equities make a remarkable move to end the day. However, this is a long road. This is a marathon, not a sprint. So there are going to be some bumpy days ahead. And I think the VIX will likely remain elevated, maybe not as high as it is today, but certainly that'll be an indication that things are not all well in the short term.
Yeah, let's look really quickly out here to all things small caps. Getting some decent paper, about 20,000+ contracts on the truncated holiday week. So that's nothing to sneeze at. Small cap shy of the 2,000 level right now, 1975 coming into showtime. That's off about 31 points just on this week. So off 1.5% just this week. So small caps still feeling the heat over the course of this past week. And of that, about 31% of the paper going up in the March contract. Actually, about 22 days to go. That's a refreshing change of pace. Most equities, it's all about the front week daily contract out there. And let's see, what is the vol out right now in small caps? I said the RVX is at about 37.60. This March contract, with about 22 days to go, has about 33, almost 34 points out there, about 33.84. That's up about almost 3 points on the week. So vol, obviously pretty frothy out here in small caps. Puts last week, 15.3% bid. This week, 15.2. So the puts have not come in at all. The calls last week, 12.6% cheap. This week, 14.5% cheap. So getting even cheaper. And the big dog out here, 19 half puts. I said we're at about a 1975, so 19 half puts going up here today, about close to 1,000 times here. That was kind of where the action was. Kind of interesting. I would have expected maybe some other prints. 2,000 calls, pretty active going out tomorrow as well. But no, it's 19 half puts taking the big dog role out here in small caps, which is kind of interesting. And not at all what I expected out here, which is always interesting. Speaking of things that are interesting, before we roll on to your questions, I know the folks out there are screaming at us. They want to hear it. They want to hear it. It's a crazy week for them. So we got to take a quick stop over into the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody. Welcome to the Ags. Todd, I won't drag you into this quagmire. I know you spend a lot of your time looking at other markets other than the Ags, but we can't really avoid them today because they are dominating our light side, especially if you look at over the past week. KC and SRW wheat up 16% over the past 24 hours. They're up about almost 6% as well. So, everyone couched this invasion in terms of energy, but you can make an argument that, and some of our listeners, astute ones, asked about this weeks ago. Also, there's an ag component to this. In Ukraine, a big wheat producer. And so what's going on out there could certainly impact the wheat markets. And that's what we're seeing out there right now. We're going to hang our hat in the SRW wheat, or the Chicago wheat is the more active of the two contracts, listeners, doing almost 200,000 contracts in this truncated week. That's a decent week for wheat out there. If you're wondering, if you don't follow wheat on a regular basis, you're wondering, where is that future right now? It's at a 932 3/4 right now. So shy of the 1,000 handle, a little bit north of the 900 handle. That's up a whopping 128 3/4 points on the week, or about 16% just since Monday, listeners. So yeah, wheat on the rampage this week. And of that nearly 200,000 contracts, almost exactly half, 49.8%, going up in the April contract that has approximately 29 days to go out here. What is the vol in wheat? You might be asking yourself. It's getting a little frothier right now. It's at about a 48. It's up 10 points over the span of the past week. So getting juicy, kind of hard to argue that isn't merited given the price action we're seeing out there. And in terms of a skew, we are seeing what looks like kind of a aggressive metal skew, but this time in the ags. Last week, the puts 7.7% cheap. This week, nobody wants the puts, 14% cheap. So the puts getting annihilated. The calls 10.2% bid last week. This week, 12.4% bid. So calls are where the action is this week. Not exactly surprising given the price action we're seeing out here. And if you're wondering to yourself, you're saying, Self, what is the most active contract this week in the old Chicago wheat? It is the par, the 1,000 calls dominating the tape out here in April, doing 11,000 contracts this week. Most of that actually yesterday, not today. 7,300 going up yesterday, only 1,800 today. I kind of would have thought maybe those would be reversed, but interesting stuff here. And then 1,900 on Tuesday. So the big day was yesterday for the par calls. And then we also have, we have the 9/2, so pretty much the close to at the money strike, also active this week, doing about 8,500 contracts. The big day for those was today, about 4,100 today, 3,000 yesterday, 1,500 on Tuesday. And then we go out to the par calls, also this time in the May contract, doing about 7,100 contracts. So par calls, very much the contract du jour out there right now. So interesting stuff. Again, ag lighting it up. We probably, maybe next week, we'll spend some more time doing a whole bunch of ags here on the show. But wheat, very much in the headlines these days as well, given the events of the past 24 hours. And definitely had to squeeze it into the show as well. But you know what else you have to squeeze into the show? It's you folks, listeners. Time for some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/the Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your futures options feedback. You guys have questions about all sorts of fun stuff, but let's get to this one first. He's been waiting patiently. This is my boy Luigi. He sent this in live, I think, on the show last week. He's been waiting patiently for his answer. I do believe, he's listening in there again today. Remember, listeners, if you want to join us for the live stream, get those questions bumped to the top of the list. TheOptionsInsider.com/secret club is the place to go. But it sounds like Luigi, Todd, and a lot of other listeners they've been asking a lot more about rates of late. I think they're starting to dip their toes into the rates complex a little bit more, maybe with a little bit of trepidation at first because they are somewhat big and intimidating products. I mean, the Eurodollar has contracts and strikes and trades volume for days all across a whole bunch of strikes. And other complexes have their own nuances as well. Like, for example, Luigi's asking about the 10-year. He says, in particular, I was wondering what the number represents on the 10-year note future. He gives an example of what does the 126 strike 160, what does that represent on the 10-year note future? So maybe, Todd, we should do a little bit of a maybe contract spec / overview of the 10-year for our listeners. How's that sound, sir?
Sure. So 126 will be your handle price. Every bond settles to par, right? So you've got this bond trading at a premium. And if you look at where we are as far as demand goes, as far as where the Fed has been doing buying over the last several years. So that 126 configure will settle at par. However, when you configure in and then futures contract, this is a little different. But when you look at a cash bond, it takes into account your payments, your coupon payments. A futures contract does not pay any coupon payments. So it is all based on a cash settlement. So if you look at and actually rolls into a physical bond. So the pricing of that 126 is actually your premium above par, put simply. It doesn't go much deeper than that. It counts in all your coupon payments that are already built into the cash bond that you're going to receive if you hold it to maturity.
Interesting stuff. I'm sure we'll have more about the rates. Actually, you have a question of the week right now, Tyler. I'd like to get your thoughts on it. It's kind of interesting. A little bit different for us, but things are afoot right now that are a little bit different out there as well. So we said to you folks, listeners, as we watch these tragic events unfold in Ukraine, many people are wondering about the extent of the impact on volatility. How long do you think we'll see the financial fallout from Ukraine? Is this an invasion-related blip, or is this going to become an insurgency and have insurgency vol that will drag on the markets for years? So we gave you 4 choices. It's going to last a few days, or is it more of like maybe a few weeks, or are we talking a few months, or are we talking on the outside maybe a few years? Mr. Todd, what are your thoughts on this? And then B, what do you think our audience is voting for?
Well, I think when you're looking at what we're seeing in Ukraine right now, it is only one variable that we really should be looking at as far as from a financial standpoint. I don't mean from a moral standpoint. We need to continue to watch. The Federal Reserve and other central banks around the world are getting ready to tighten and pull back on this accommodative policy, which they put in place 2 years ago. That is going to rattle markets no matter how you look at it. That's going to keep volatility up a little bit more than would naturally occur. And plus, then you also have the economic fallout of any changes from these Federal Reserve policies, as well as some of the geopolitical risks that we're seeing. So volatility isn't going to go down in a matter of days. We may see some of the conflict go down in a matter of days. We may see some of the economic numbers improve, but the markets are always forward-looking. And at this point, I'm looking more weeks and months until we get some kind of a path that we can say, okay, now we're on this path. And once you start to build a trend, that's when volatility tends to go down, when the market feels comfortable. But right now, markets are not comfortable.
No, they are not. Let's see if our audience is comfortable. Actually, it's moved around. Obviously, this just went live before our show earlier this morning, and it's actually a literal tie right now between a few days and a few weeks, both at 37.9%. Some of you leaning on the longer-term tip, 13.8% for a few years, and a few months, 10.3%. I know it's a little bit outside of the questions we normally ask you, but it's an interesting time. What's the old Chinese curse? May you live in interesting times. And so we thought we would pick your brain about that. Since we're going back to the live chat, let's get to squeeze one more in. We'll be nice. We'll give Luigi a double dose of questions this week. He says also, I was thinking of jumping in on the corn futures with the Ukraine thing going on. Is the liquidity something I should be concerned with? Well, I think you picked the right one, Luigi. If you're going to dive into the ags, I've said it before. A lot of our ag specialist guests have said it before. You could do a lot worse than starting in corn. Right now, as we speak on a shortened holiday week, 572,000 contracts have gone up in corn right now. So it does the numbers. It's pretty liquid. And of that, about a little more than a third, about 34.3% of the paper is going up in that front April contract. So that's a decent amount of premium in the near portion of the curve. If you want to go out to, so that was April. If you want to go out to May, you get about 30% of the paper still going out. So the front few contracts doing a decent amount of paper. You go out to July, talking about 14% of the paper out there. Let's look at DEES. What's DEES up? DEES is about 13%. So you get a nice, pretty decent distribution of the liquidity out there. So I think I don't know how far out you're looking to go, Luigi, but I think it's much better off than starting in, let's say, an Oats, which has no real options liquidity to speak of there. Todd, would you agree if you're going to dive into the ags and you're concerned about liquidity, corn is probably a decent starting point?
Corn is a great starting point, especially obviously price action has been a little bit, we'll call it wonky. Is that a word we can use on air? I think at this point, all corn is the place to start. Beans would also be another good spot to start, but beans in the teens scares me a little bit.
Beans in the teens. I like that. Yeah, and I use wonky all the time, Todd, so feel free to have at it. Let's get to this one here as well from DLC. I expected a lot of questions like this. DLC says, hey, guys. Well, hello, DLC. This is, what are your thoughts on UNG as a nat gas play right now? I know a lot of you may be spooked or you don't have futures or futures options accounts. You can't trade the direct CME future or futures option. So you like to play in your equity accounts with products like UNG. UNG, of course, the natural gas fund there, and trading right now 16.33, up about half a buck over the past week or so, up about 20 cents today. UNG is an interesting one there. It's one of these products that's attempting to replicate that front month nat gas future over there at CME. It also holds some swaps and some other things out there. My opinions in the past on these types of products. It all comes down to how they're structured and how much the roll is really going to drag on this. Right, I'm looking at you right now at some of the top holdings for UNG. It's got half of its money in futures and half of its money in cash. So I don't know if that's what you want to be paying for UNG right now. But I'm curious, Todd, you must get inquiries like this all the time. Maybe people, for whatever reason, are not ready or not able yet to dip their toes into the futures or futures options, so they can look at some of these ETFs. Do you have any thoughts in particular on this one, the UNG as a nat gas play, Todd?
I think you're right. I think it looks like a good way to get involved, but you have to look below the surface, because a lot of times these ETFs, you see a big move and you look at your ETF and you say, well, why didn't I see that same move? Because under the surface, there's a lot of moving parts, whether it's option, you move to a different strike, so you got to roll out of one strike into the other. Perhaps, like you said, they hold a lot of cash. They're just not fully vested right now at this moment. So while the fund does reflect what it says it does, maybe it is invested 100%. So I think any time you want to dip your toe, certainly when it comes to commodities, cryptocurrencies, even like gold and silver ETFs, that's a good way to do it. But again, you got to read the fine print and make sure you're buying what you think you're buying.
Yeah, I'm looking at this price chart here for UNG. And if you held it for the better part of the last month, you may not be that happy with this product, even though we have seen some interesting action in NatGas during that period. UNG was trading nearly 18.98 on the 2nd of February, and less than a week later, it was down to about 14, actually got into the 13 handle. So you sold off pretty hard in that period when we saw some turbulence in NatGas as well. So that also had a little bit of a sell-off period, but to that extent, that's a pretty dramatic sell-off. So if you were loading up, coming in like the first week of February, loading up on UNG, thinking you're going to play this NatGas pop, you got hammered pretty aggressively. So something to keep in mind when you're looking at these. The devil is always in the details. I'm never really, I've recommended GLD and SLV in the past because they hold physical gold. You can't really do that with NatGas, right? It's not exactly a perpetual asset. So they have to replicate it using futures, and then that's when the devil is in the details. How frequently do they roll? What is their balance? Are they mostly leaning towards the front portion, so they're going to get crushed by roll yield? Are they going a little bit farther out, so they're more secure from roll yield, but then they don't track as well? Are they going to do some mix in between, so it's a little bit of each? It's very much a pick your poison out there. And some of the performance recently for this UNG, you may argue, wasn't the best. But do you have some experience? Have you been trading this? What are your thoughts on UNG? Hit us up. listeners. We do like to hear from all of you folks out there. Unfortunately, that music means we've come to the end. Man, we squeezed a lot of living here into just an hour. We talked metals, we talked rates, we talked ags, we talked equities, we talked energy. Man, we could do probably 3 hours on a show on a day like today, listeners. Interesting stuff here. But before we go, Mr. Todd, if folks want to reach out to you out there in the world of Ambrosino Brothers, where should they go? What should they do?
I can be found on the Bloomberg Network, TCOLVIN14 at Bloomberg.net. My Twitter handle is TJC1539.
TJC1539 out there. All right, really quickly, because before we roll out of here, more follow-ups on his question from Luigi. Todd, I'll be nice. I'll give him one more. He says, if I understand Todd correctly, par is the 100,000 strike and the 126 is 1.26% above par.
It is. It's the premium you're going to pay because right now their bond prices are trading at a premium. If it was trading at, say, 90, you would be buying it at a discount. And it's all priced into your yield. So if you look at your yield at 2%, right, give or take, that's what you would make if you held a cash bond to maturity based on those specifications. But because we don't pay coupons from the futures, it's all priced in there automatically. So your futures price is always going to be higher.
There you go. All right. Hopefully the third time is the charm there for you, Louis. I know this stuff's confusing. We'll get you there. Don't worry. And, of course, if you want to get there in between episodes of this program, listeners, head on over to cmegroup.com/TWIFO or /TWIO. I encourage you, keep running those reports these days because, as we've seen just in the past 24 hours, things are popping off. So if you want to check the action in some commodities that are near and dear to you right now, get on over there. cmegroup.com/TWIFO is the place to go. And you know where to go to keep up on all the latest from all things small caps. Are they headed for a correction? Are they breaking out of it? Are they reversing as we speak? FTSE Russell.com is the place to go to kick the tires and light the fires. Check out their COVID-19 impact section. A lot of great research on all of that stuff. And, of course, what's going on out there from a correction and from a Santa Claus rally, all these perspectives in the world of small caps. Give them a follow on the old Twitters while you're at it as well, at FTSE Russell, all one word. That's going to do it for us today on the network. Listeners, we'll be back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And then after that, 2 p.m. Central, 3 p.m. Eastern to wrap up your week, all of you in the Secret Club, with a little bit of the old options oddities. If you need any reminders, listeners, the past 24 hours, the world is a crazy place. So keep your risk under control. Whatever you do, stay safe out there, listeners. And we'll see you back here tomorrow for Volatility Views, Monday for the option block, and all the way back to Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.